Just a few months ago, we told you about a downtown Minneapolis office building that sold for more than 90% off. Well, this week, the new buyers of an even bigger high-rise said, hold my beer. According to the Star Tribune, all 31 floors of the Ameriprise Financial Center just sold for a little more than $6 million. That is 97% less than the $200 million it sold for in 2016. Kent has been following these fire sales for months now, and he's here on the show tonight to try and make this make, I don't know, dollars and cents.
I'll try, Jana. The sales certainly turned heads among experts, but those I spoke to say not because of that huge discount, because it's sold at all, given the challenges going on right now.
If you're surprised about the steep discount for this downtown Minneapolis office tower, you haven't been paying attention.
I think it's just a sign of where things are headed. Whether it's 6 million or zero, that's the starting place.
John Breitinger works for brokerage firm Cushman & Wakefield, which is reporting a downtown Minneapolis office vacancy rate exceeding 33%. And when Ameriprise completes its move out of its old headquarters in October, he says this building will likely be 100% vacant.
After that, it's all pure expense until they figure out, a new use.
And he knows exactly how challenging figuring that out can be right now.
I'm currently working on 8 office buildings that need to be repositioned and redeveloped.
It's why he's impressed to see Onward Investors, based in Minnetonka, also declare it has a, quote, desire to be an active participant in the recovery of downtown Minneapolis, and look forward to engaging a multitude of stakeholders in the coming months as we reimagine this well-known asset in the Minneapolis skyline.
I think it's encouraging that somebody's making a commitment to a building in downtown Minneapolis. It'll be super interesting to learn what their plan is.
At 31 stories and nearly 1 million square feet, he says Ameriprise Center also poses a big challenge because it was designed for a single tenant, and no single tenant can fill it now.
You're looking at kind of a $300 million threshold to convert that building to even office.
We will bring in natural light.
Though residential conversions, such as the one we toured with Sherman Associates next door a year ago, is another option, he says that comes with even more expense.
You're really replacing all of the mechanical, electrical, and plumbing.
He says incentives from the city and state could help, especially a proposed expanded tax credit for underutilized buildings. And even though budgets are tight this year, he says if skyscrapers keep selling for cents on the dollar, the property taxes they provide will completely crumble.
These buildings will be reassessed, and it's hard to argue, that they really have any value without reinvestment and conversion to something else.
Because if nothing happens inside, come October, the costs will still stack up.
Property taxes, insurance, keeping some level of heat and security is going to be $7-8 million a year.
Beyond its statement, Onward Investors isn't saying exactly what it might have in mind for the Ameriprise Tower, but the Minneapolis Director of Community Planning and Economic Development sent us a statement saying the lower sale price is a tremendous opportunity for this investor to transition this quality structure into something both financially feasible and exciting. So essentially, Jana, they've got a lot of money to play with.
Feasible, exciting, reinvention. Those are beautiful words, Kent. I'm going to ask a question from the Peanut Gallery. Is it ever possible that if you're going to buy it for $6 million that you just ask the city, hey, we want to tear it down?
That is something that a lot of people have talked about. In this case, we've got no indications that that's even on the table. They really are invested in doing something with the property. But John said he thinks that there will be a time that some building is knocked down.
All right. Thanks, Kent. We appreciate it. We'll be right back.